Hey everybody, this is Sean Sheppard, founding partner at GrowthX, where we invest in seed stage startups, help them grow and develop the talent to work in them. Today on the show, we're going to talk a little bit about why companies fail and what you can do about it. What are the keys to success in the innovation economy? And what skills do you need to develop to be successful and master your future?
Congratulations! You are tuned into Dov Baron's Leadership and Loyalty Show, the #1 podcast for Fortune 500 executives and those who are dedicated to creating a quantum leap in leadership. Your host, Dov Baron, is the founder of FullMontyLeadership.com. He's an executive mentor to leaders like you, a contributing writer for Entrepreneur Magazine, CEO World, and he's been featured on CNN, Fox, CBS, and many other notable sites. Dov Baron is an international business speaker who was named by Inc. magazine as one of the top 100 leadership speakers to hire. Now, over to Dov Baron.
Welcome, dear friends, fans, and fellow aficionados of leadership excellence. Thank you for joining us on this episode of Dov Baron's Leadership and Loyalty Tips for Executives, part of the Full Monty interview series. I'm your host, Dov Baron, founder of Full Monty Leadership, and I'm here to assist you tapping into the one thing in your business that changes everything. So let me ask you, what do you need to do to up-level your leadership? Well, today we're going to be taking an insider look at what's wrong with venture capital. And I'm going to be chatting with people who not only know how to fix what's broken, they're actually doing it. Remember, you can chat about this episode or any of our past episodes inside of our Facebook page by simply going to Facebook and looking for Dov Baron Leadership and Loyalty Podcast. If you're a new listener, new viewer, thank you for joining us. Strap yourself in. We're about to go full Monty. And remember, you can find us on iTunes, Spotify, iHeartRadio, or wherever you tune into podcasts. And we are always in need of your help in staying relevant. So please get yourself over to iTunes, rate, review, and subscribe to the show. When you do, let us know. Maybe we'll give you a shout out on a live show. You can also catch us on traditional radio stations across the United States every Monday and Thursday, all the way from Georgia, Florida, to Wisconsin and Philadelphia. If you're a regular listener, a big thank you to you for making us the #1 podcast globally for Fortune 500 listeners. And you can also find us on Roku TV, where we have approximately 100,000 subscribers with a potential reach of 2.5 to 4 million listeners for every show. We're honored and grateful to be cited by Inc.com as the #1 podcast to make you a better leader. You can also find us on Google Home and Alexa by simply saying, play Dov Baron Podcast. Again, thank you for sharing the show with everybody you know. All right, let's strip it down and dive right in. As a leader, whether you're a CEO, someone in the C-suite, a sales leader, an entrepreneur leader in any capacity, you know Silicon Valley has transformed the world of venture capital. But what's the real cost of receiving venture capital? And is venture capital the way to go for your organization? All too often, even the people in the venture capital world can't be clear about answering those questions. If you want to know who can, stay tuned, because you are about to find out. Our guest on this episode is Andrew Goldner and Sean Sheppard. Andrew and Sean are the founding partners at GrowthX. Andrew has been in the technology sector since 1998, based in New York City, Hong Kong, Singapore, and Palo Alto. He began his career in technology as a lawyer for the early internet pioneers in search, such as Alta Vista. You may remember those. It went like this. Ba-ding, ba-ding, and Yahoo, and others while practicing law. He then served as a publisher at Reuters News and then co-founder and managing director at the company's legal media business in Asia Pacific and the Middle East. He then co-founded Good Money to democratize high-performance value-based investing. During that time, Andrew met his current partners and co-founded GrowthX. Sean Sheppard is a serial tech entrepreneur and current founding partner at GrowthX. As a serial entrepreneur, Sean Sheppard has successfully grown dozens of early-stage companies across a wide variety of products and markets. He was recently named the #2 sales influencer online and contributor at the Huffington Post. As co-founder of Silicon Valley-based seed stage venture capital fund and marketing development accelerator GrowthX and GrowthX Academy, he is now committed to working with countries, companies, and startups on developing the next generation of entrepreneurs, innovators, and sales leaders on how to execute in the innovation economy. Ladies and gentlemen, please put your hands together and help me welcome Andrew Goldner and Sheppard. Welcome, gentlemen.
Pleasure to be here. Grateful for the opportunity, Dove.
Yeah, it's good to have you guys. Thanks. Thank you for working on 12 cups of coffee and the red eye, Sean, and taking the time to be with us between meetings and all the rest of it. We know you guys are very busy, and we're definitely grateful to have you here. So thank you both very much. You know, everyone's talking about being innovative. That word for me is just sort of thrown around. And all too often, those folks wouldn't recognize innovation if it came up and bit them on the ass. You guys are committed to innovating venture capital, which seems weird to me. So the first question is, why does venture capital need innovation? Because it seems pretty simple.
Well, I mean, the fact that the innovation economy is upon us in a way that it never was 50 years ago means that the funding source has to change with the times. To put it simply, Doug, we live in the age of applied technology, but when venture capital was founded about 6 decades ago, we were all living in the age of developed technology. I mean, if you think about where venture capital came from, it was to fund very expensive technology that was very complex to build, and there were only a handful of people in the world that knew how to innovate. And so venture ran to fund that, and just getting to prototype was extremely expensive. Yes. But I mean, look where we are today. And again, you're really only talking about 50 or so years later. So I mean, a blip on the radar, even just for the human race, right? And yet now, it's never been cheaper or easier to build technology. And thanks to the developer boot camps and the rise of the computer science degree, there's a plethora of people that know how to build technology, the so-called innovators. The challenge is, how do you get that into the hands of customers, right? Sean's expertise, that's what's missing. And yet venture has continued to deploy undifferentiated dollars. I'll say one last thing, right? Just to prove that point. There is nowhere in the world that has as much venture capital being deployed as Silicon Valley, by orders of magnitude. That very small strip of land between San Jose and San Francisco deploys by far over 50% of all venture dollars deployed globally. Yet, the failure rate among Silicon Valley founders is the same as everywhere else in the world. So I tell you, does VC need to be innovated or not?
Well, I mean, based on what you just said there, it certainly does. What stands out for you, Sean? Is it the same as what Andrew was saying, or is it something else in the context of why it so desperately needs innovation?
Yeah, it's the Valley and the culture largely has been predicated on the concept of technology development as opposed to market development. And when you're building deep science and you're bringing things to market that are highly defensible, you can behave badly and still be successful. But today, that's not the case as much. And 80% of the venture capital being deployed, roughly, the majority of it, let's say, is being deployed into things that aren't that defensible. They're easy to copy. You can follow fast. You talked at the beginning about Alta Vista relative to Google, right? So it becomes more now than ever about execution, and the data supports it. CB Insights tracks the success rate of startups and the reasons for failure. 8 of the top 10 reasons have nothing to do with product and technology. They have to do with markets and the behaviors of the founders running them. And the reality is that
So let's go to that, because many companies, many individuals will jump up and down and do the dance of joy because they got funding.
Celebrating the raise.
What's that?
They celebrate the raise.
Right. They celebrate the raise, right? They, got all this money now. It's all going to be great. And yet 70% of all funded companies fail, not just in venture capital, but 70% of all funded companies fail. Mm-hmm. Why is that? What is it we need to change? Because I think that a lot of times people genuinely believe that the problem is money, and it is, but it's not exclusively, right? So walk us through a little bit. What needs to change that?
They need to focus on the problem that's being solved for the market, not the product that they're building for themselves or their own vision. And we were all serial entrepreneurs turned investors who met investing alongside each other in companies. And we got frustrated that companies were failing, not because they couldn't make the technology work, but because they couldn't get the market to work with them. And we looked around the venture capital world and we realized, not being Sand Hill Road blue bloods, we came at it from a different perspective. And we saw that it was very obvious to us why they were failing. Even though their emails and their investor letters said, we're shutting down the company because we're running out of money or we couldn't raise more. We went, bullshit, you pissed away the money we gave you on stupid stuff. What you really should be doing is focusing on identifying key problems that you can own a use case, solve those problems, and think thoughtfully and strategically about, if I can solve it for this person in this use case, is there a larger market behind that will keep me on the field long enough to build something that might be predictable, profitable, scalable, and sustainable. But they don't think like that on the whole. And what makes them great at what they do, tinkering with products, thinking about technology, and realizing a vision that they've come up with themselves and bias themselves into confirming instead of informing, is also the things that make them very weak at the market development side of it. It's one of the reasons why Silicon Valley VCs often say, we don't invest in solo founders. What they're really saying is we need somebody who knows how to develop the business alongside the product or the technology.
Right.
And as our focus, because that's been our expertise, is we're market developers, not product developers. So we set out to develop a program that could help our companies grow. And then that's when we ran into the problem of venture capital and the economic model of 2 and 20, which Andrew can talk to you about, which isn't suited at all to be helpful at the seed stage.
Yeah, it's about incentives that are simply misaligned. And one thing any founder, any leader will tell you is if you don't get busy focusing on your priorities, you're going to get busy on other people's priorities. Nobody walks up to you and says, excuse me, but I need you to subjugate your priorities to mine. But the reality is the outcome of the conversation is just as if they had said that. And when a Silicon Valley or any venture capitalist sits down with a founder, most especially founders who don't understand what venture capital is, an asset class, doesn't understand how it behaves, doesn't understand what it's going to expect of them, that founder gets busy working the VC's priorities. And what is the incentive in venture capital? As Sean said, the 2 and 20 model. The venture capitalist gets to keep 2% of the fund side to pay their overhead, and they get 20% of the profit as a reward for doing a great job. Well, just do that simple math. I mean, even if you're a great fundraiser as an individual and as a first fund, you cobble together $10 million, which is no small amount of money. What's 2% of $10 million? I mean, the reality is for the venture capitalists, in terms of helping its founders, it adds up to a whole bunch of who gives a shit. And so the incentive is to deploy money and to raise more money. And the problem for the venture capitalist, who then becomes an addict, jumping from fund to fund to cobble together different management fees, right, to build the bigger team. Right now, it becomes how much venture can I raise for my fund from limited partners? But that becomes such a large number that you can't responsibly deploy it into an ecosystem and deliver the returns that your LPs require. So that forces you to write larger checks. And those larger checks force you to insist on a higher valuation because you don't want to own more than 20 or 25%, let's say, as a Series A venture capitalist of the company that you're investing in. And so now all of a sudden we've created a situation where founder and funder talk about what a company is worth and never once think about revenue, never once think about creating a company of enduring and lasting value that helps people create economic prosperity for themselves and their communities, that drive job growth, the things that it ought to be doing in the first place. And it also creates a perverse second-class status citizen of the so-called lifestyle entrepreneur. I mean, that is said with a pejorative intent in Silicon Valley. If someone says that you are a lifestyle entrepreneur, that's basically an insult. And so these are the observations that we came up with, and these are the true cold, hard facts about how most of venture practice, that we said it's got to be done differently, and it's got to align to where the problems are, and it's got to bring founders and funders in focus in a long-term, healthy, sustainable relationship.
Yeah, it's interesting because there's a lot to unpack in what you just said, because at the simple level is something that I really want to jump into in a minute, but is this thing around that I've seen, as a consultant that goes in and works with companies, is, we're focused on this, and then they get VC, they get some venture capital, and then they say, well, actually, no, we're focused on this now. Hold on a second. You brought me in to help you with your purpose and the values of the company, and to actually turn that to be what the driving force of the company is and the driving force of the culture. And you just told me it's different. And what they've done is, as you said, they've taken on this agenda that comes from a VC, that comes from the venture capitalists. And they feel like this is why, when you and I talked originally, Andrew, I was like, yeah, this is an important subject, because it's like in venture capital, it's like, for many people, it's like they sell their soul. They lose the sense of the real purpose. But at the same time, this is what I wanted to address with you, is this balancing act. If I don't get the money, my dream, my baby dies. And if I get the money, my dream, my baby dies, because I have to put the venture capitalist first.
I think it's about making sure that you're aligned with the type of capital. I mean, listen, as we always say, the best people to raise money from are your customers. They don't take board seats or equity. They just want you to help them. And listen, venture capitalists, by far, with some very notable and ugly exceptions, VCs aren't evil people out to do bad. It's just about having the incentives misaligned, right? And listen, I mean, I grew up in Cleveland, Ohio, right? And, in Cleveland, if my mother was to start a company and grow it to 10 million of annual revenue, she would create wealth for my family. She would have become a respected member of her community. And in Silicon Valley, they would have called her a failure. It's just because of the misalignment of what the venture capital asset class is and what the general partners at a fund have promised their limited partners that they will do with this part of the wealth that they are managing, whether it's individual wealth or pension fund wealth. And so I think what's very important is that founders understand this, and that there be an open and honest and transparent dialogue between the source of capital and the demand for the capital as to the interest in the long term, for the company and the way they want to grow that company. In my view, an entrepreneur is someone who wants to work in their own store. They don't want to work in your store, period. That is a definition of an entrepreneur. Now, that entrepreneur might want to also have 19 stores in 5 different countries in 2.5 years. That would be a venture capable entrepreneur. But another type of entrepreneur just might want to spend time with their family or doing community work civically. Again, I think it's just about having an open and honest dialogue, and the purpose of money and the source of money, and when you raise money, it's just a matter of having a conversation.
Right. And aligned with that is this question that I want to have, because as I said, I think that people will quite literally sell their soul to get capital. And one of the things that I really like about you guys and what you're doing is that you are values based. That your venture capitalist fund is values based, and you want to work with values based organizations. So talk to us a little bit, if you would, gents, about what is the Growth X values, and how do they come into play in the context of somebody who maybe is thinking about or is actively out there trying to raise venture capital?
Well, I think the first and foremost is we are people first. we're a group of partners that have all been entrepreneurs and have all dealt with people that we know, like, and trust, and also dealt with those that we don't. And so we have chosen actively to share our value system with the world, to nurture the people that agree with us closer and the people that don't further away. And the longer we do this, the more experience we gain. And as you know, we've heard before, experience is what you get when you don't get what you want. We've figured out the kinds of people we want to work with, and and it's okay. We've learned how to say no to certain people. We've learned how to fall in love with people over products. We've learned how to focus on the people in the markets, recognizing that the product is less important and the problem in the market is more important. And if you have an opportunity to get feedback from the market to solve a problem in a very whole and complete way, you have an opportunity to build something that could potentially be venture capable by our estimation. And we genuinely want to help. We want to invest in people who care more about our health than our money, and that's why we structured our fund the way we did. And we spent a lot of time. We worked together independently, getting to know each other for close to 2 years before we decided to jump into bed together. And we spent a lot of time thinking very clearly about what we wanted this to become, because for all of us, this wasn't our next thing. We were hoping this would be our last thing. And so we wanted to build something that was sustainable and create a legacy, not just for ourselves, but genuinely for the community of people who saw the world the way that we did. We knew what our superpowers were. We knew how to apply that to venture capital, or we knew we wanted to. We spent the first 20 minutes here gaining consensus on what the problem is, which is it's not hard to do. But agreeing on a solution, executing against a solution, and finding something that brings meaning to your life while it also creates value in the world is not an easy thing to do. But we feel like we found it, and it was all accidental. It was not, it wasn't intentional. We were just setting out to solve our own problems. We saw the world in the same way. We had similar skill sets and saw a gap in the market, which was seed stage venture capital wasn't being helpful. It wasn't economically structured to be helpful. And so Andrew, the genius lawyer, and the people he brought into help us, spent a lot of time trying to figure out a way that we could create a business model, if you will, that would support our value system.
And those 8 core values are available at growthx.com. And frankly, we think they're a lot more important than how much of an initial check we write, or what stage we invest at, or what type of startups we're looking for. Our core values are our promise of experience. They are our brand. You should hold us accountable because we feel like everything communicates and you can't not communicate. And so in each instance and in each interaction you have with GrowthX and anybody associated with GrowthX, you should hold us accountable for those core values. And if we don't live up to them, you should provide us with feedback. And when you do, the only 2 words you should hear out of our mouths are thank you, because feedback is a gift and we're grateful. And so we're also fallible human beings, and so we will fall short regularly. But this is the promise of experience. And by the way, when you come into our community in any form, not only does it become the promise of experience that you can expect from us, but it's now what you owe to the community. And so those are things that we took as a partnership a long time to come up with. We think of them almost as first principles. They're nothing. They don't really change regularly. My favorite is grateful and gratefulness. And you talk about a lot on your program, and you help executives around the world understand about the leadership and leadership qualities and the important elements. And as you talk to people around the world, Doug, and bring out those insights, the thing to me that stands out the most for us, and what I've heard before, is gratefulness. And I think that just goes a long way, practicing it yourself and having that type of leadership. And for GrowthX, again, when we meet a founder, the first thing that we do is thank them, because we're grateful for the opportunity to get to know them. And what we want to do is earn the opportunity to invest in them. And we earn that right by being helpful.
Yeah, I've always said that generosity and gratitude are the antidote to entitlement.
Amen.
So do you guys? I really want to hear from you guys because you were speaking about right at the beginning. Both of you actually have mentioned, that we're in this innovation economy. Do you believe that there are a different set of leadership skills needed for an innovation economy versus the other kinds of economies?
Great question. Sean, I know you got a lot of thoughts on that.
Did we lose Sean?
I'm here. Sorry. The last thing I got from you was innovation economy. What was the balance of that question?
The question was, do you believe that there's a different set of leadership skills needed for an innovation economy? There's a different set of leadership skills.
Yes. Well, I think there are some, let's just say, some new attributes that have been around but have not been prioritized. For example, the so-called soft skills. I always I always enjoy the irony of that term because why do we call them soft skills when they're the hardest ones to master?
Yes.
And that begins with mindset. That begins with a couple of things. It begins with the mindset, what we call a growth X mindset, or what Carol Dweck talks about in her book, Mindset, the growth mindset, which began with her work at Stanford University in understanding early childhood development, trying to understand how and when we start changing how we respond to failure as we grow up as children. The average toddler falls 17 times an hour when they're learning how to walk. I've never seen a headline in the New York Times that said, toddler says, screw it, I'm done, I'm crawling. Regardless of what happens, somehow we all, if we have the actual physical ability to do it, end up learning how to walk in spite of everything that happens in between. Yet even simpler, less challenging things over time start to take over, and we start to develop fixed mindsets, whether it's outside society factors or it's being told no 5 times as often as we're told yes between the ages of 2 and 18. Whatever those conditions are, or just over and over viewing failure as somehow something other than what it really is, which is a learning opportunity. And so creating a growth mindset where you change your belief system and you put into action and monitor the results of saying things like feedback is a gift, and taking the word rejection out of your vocabulary and replacing it with feedback, and treating that feedback in that way is an example of that. It's being it's being stoic in moments of crisis. It's not just demonstrating consistent leadership values, but it's aligning those things to the soft skills, more EQ than IQ per se. And look, I think a lot of this isn't new to leadership. I'm fortunate to be raised by a man who made this transition from the military to an executive in a global, one of the 5-10 largest companies in the world. And he didn't rise to the top because he was a great mechanical engineer, which was his trade. He rose to the top because he knew how to manage engineers, and he knew how to lead those engineers, and he knew how to inspire them. And so while we have to do those same things, we just have to do it at a more rapid pace than we ever did before, because we can't predict this future anymore the way that we used to. The turnover on the S&P 500 in 1970 was 75 years. I think today it's less than 15. And the future says that the predictions are that somewhere around 30 to 40% of the S&P 500 in the year 2030 don't exist yet. That's how quickly things change. When you have Jeff Bezos coming out and saying, I'm genuinely concerned about whether or not Amazon will exist in 25 or 30 years, that's a growth mindset. And that scares the hell out of the market and other people, but that's exactly the kind of leadership that we're talking about. Someone who's talking about how do you build things to last in the innovation economy, where you're facing a future you can't predict, where 40% of the jobs that exist today won't exist by 2050. It doesn't mean we'll have 40% unemployment. We had a 40% agrarian economy in 1900. We have a 3% agrarian economy today. We don't have 37% unemployment. Every new problem faced creates a new opportunity and a new way to do that. So how do we retrain not just the leadership, but those who work for them and they support into that appropriate mindset, a way to develop those skills. Business acumen. Do you understand how businesses run and how you can contribute to those? Market acumen. Can you ramp yourself up quickly on a new industry segment, sector, domain expertise, and articulate that through solid communication skills? And I don't mean just asynchronously, but I mean, how can you verbally, non-verbally articulate your value, the contribution you can make, and how you can tie that to the work that you're doing? And can you do it with this mindset of I'm ready to adapt and change to anything. I embrace feedback. I'm willing to learn and grow. And that, by the way, there is no distinction in the innovation economy between personal and professional development. If you develop the person, you will develop the professional, and they can move from any industry, sector, or situation because they've got strong analytical and problem-solving skills. They know how to think for themselves. They embrace the truth. They're honest about that truth. They use that truth to be better for themselves and for others.
Yeah, it's fascinating to me to watch old world leaders, which is what I'll call them, those who are command and control. They're often even younger than I am, but they're still running that mentality, believing that they can do the command and control and it's going to work. And the argument on their side, in fairness, is, well, it has worked. We've been in business for 40 years and it's worked. Yeah. Do you want to be in business for another 40? Because you can't keep doing this. And that's a very difficult thing to get because of our own psychological limitation, which is called mortality. It's hard for us to think beyond ourselves, beyond, in future generations. I love what you were saying there, because I, with all my heartness, the work that we do, believe that soft skills are the hardest skills, and they are the most vital skills because you can train the hard skills, but the soft skills take time. They take a commitment, and they're not a one and done. So you can literally get the skill and be terrible at it the next day, and you're going to have to go back. And I've often said that soft skills, the only thing that I know that's a hard skill that's comparable to soft skills is golf, because you can go out and just play fantastic on one day, and then in the morning, and you go back in the afternoon and play terrible. And that's like soft skills. You can be a masterful communicator, and then you can go in the next conversation and be crap. And it's that constant awareness of bringing up the game and never, ever lying on your laurels. You can't lie on your laurels in golf. You can't lie on your laurels in psychology and professional development and communication skills. And how do we, guys, I'm asking you genuinely, how do we get this so clear to leaders today, particularly in the context of venture capital, when they're actually looking at, well, we have to make sure that all the lines are in line, all the dots are on the I's, all the T's are crossed. They forget this stuff. How do we get them to really see how vitally important this is?
Well, I'm glad you brought that up, because you need a framework for this. And that's all about what executing in the innovation economy is about. So there's two things I've been looking broadly from this entire equation. One is a framework for how to do it. And the second is an economically viable, sustainable business model to allow you to do it in a fully aligned way, as we alluded to earlier. So I'll say a couple of things about that whole anecdote around golf, because I started my career as a professional golfer, ironically enough.
By the way, I'm terrible at golf. I've only played like twice. But I've been around a lot of golfers who will constantly tell me that.
It's a wonderful. I've got an article that we're going to publish specifically on what I learned from teaching golf that I can apply to teaching entrepreneurship, and that is that the golf ball never lies. It always tells you the truth if you're willing to listen, because it can only do 9 things. It's simple. It's the laws of physics, and if you understand that and you're willing to accept the truth, and you're willing to create a functional learning organization around that truth in pursuit of it to accelerate the path to that truth, you then will find predictable, repeatable, scalable profitability in that instance. And then, of course, you have to continue to innovate and work on that. But those are the 3 objectives to our entire framework and methodology. Number 1, you need to find the truth, whatever that truth is about where your product fits in a market, if it does at all, and what to do about it. Number 2, you need to create a functional learning organization who's pursuing that truth in the most accelerated way possible. And number three is, can you find indications of profitability to build a sustainable business through the course of finding that truth and iterating on that truth? Those are the three things that you need. And I would say this about how do you do that, and how do you put that in practice? One of the things we focus on is, how do you accelerate everything, right? Once you have a framework in place, you recognize, once again, you've got limited time, money, and resources to find your truth. So how do you do it in the quickest, most efficient way possible? Our other partner, Will Bunker, who founded the world's largest online dating site on $90,000 of investment, which you all know now as Match.com, used to have on the whiteboard in his office, most money, least work. Every day, that was the drum that they banged for 5 years,
right.
30% growth month over month for 5 straight years before they sold it. And it was always about that. So if you're thinking about how do you efficiently get to your truth, you have to accelerate learning. So what are the principles of accelerated learning? The number one principle is direct experience. And you alluded to that, Dov, when you said, okay, I tried something. I'm shit at it today, and I'll probably be shit at it tomorrow. But my goal is to be a little less shit at it tomorrow than I was today based on what I learned. And if you truly have a growth mindset, and you truly believe that that feedback is a gift, and you and your organization, even if it's just you and one other person, are functionally learning together, buy into that philosophy, behave in that way, and then hold each other accountable to it, you can get there faster. What there is, I don't know. And that's always the first question everybody asks. Well, how long does it take to accelerate a company? How long does it take to find product market fit? How long does it take to find profitability? I don't know, but what I do know is how to find out. And I know how to do it in a way that's the fastest, most efficient way possible, regardless of product, market, industry, or sector. Because it's always about this one simple dynamic. It's taking something to a new place. And I don't care if that's an existing something and that's an existing place, but if they've never met before, there's a learning curve. And if you want to get to revenue, you've got to go through that learning curve, because we believe learning leads to revenue. And if you buy into that as part of our philosophy, and then you agree that, okay, great, this philosophy is wonderful, but where's the meat in the sandwich? The meat is in our market acceleration program methodology, which has 3 very specific milestones with a whole series of stages, phases, focuses, outcomes, and deliverables and resources at every milestone. And every one of them is iterated on until patterns are developed and recognized. And then everything that we learn informs the next thing that we do in a very data-driven way. And it might sound trite, and a lot of people say, well, this is easy to do online if you're measuring click funnels and heat maps on Hotjar. But the reality is anytime you take something to someplace new, it's a human that's doing it. And so most of it's done offline, which now means you have to turn that human into a data collection and processing machine that turns that into actionable insights that help you make better choices with what you have. And that's not easy. And when you talk about the reasons these companies fail, the behaviors of the people that are responsible for this are 2 of the top 5 or 6 reasons why they fail. The other top reasons have to do with the market not willing to accept what you're offering. And if you don't have a growth mindset and you're not willing to listen, you can't pivot on the fly. 50% of successful startups pivot at least once. 30% pivot at least twice.
Wow.
That's a normal thing. And we see founders all the time feel like they failed somehow because what they thought the market wanted wasn't what they wanted. And we're saying, no. They're telling you what they want. You now have an opportunity to adjust towards what they want if you want to. It's your choice, but you have that opportunity. And what
that's a great and an important piece, particularly in the context of growth mindset and leadership psychology, which is my area, because oftentimes a person will say the market wants X, the evidence shows it wants Y, but the person won't give up X. And the reason they won't give up X is because they can't bear to be wrong. Their ego is so involved and they're so emotionally invested in being right that they'd actually rather go broke than admit, oh, we can pivot. And so it's like it's a shaming So self-shaming.
That's why, Gov. I mean, you hit the nail right on the head. Why, as seed stage venture capitalists, the number one thing that we look for is not a cool product, is not a smart technology team. It's people that are learn-it-alls and not know-it-alls.
Yeah.
They have an insatiable appetite for learning and curiosity, and if their goal is to be less wrong tomorrow than they are today, that is a very hard thing to identify when you've been forced into a microwavable relationship, which is what investing forces you into. But that is the hard part, and that is what we look for, because the reality is the stage that we invest at, you can overcome so much. I mean, you talk about all the stats that Sean has mentioned. The reality is if you have a learn-it-all mindset, but there's an interesting thing that's happening to humans. There's this inverse proportional relationship between the advance of technology and, as humans, our masterfulness. Because ever since the creation of the printing press by Gutenberg, when suddenly knowledge became easier to get and more people were able to get it, and then, of course, there's been no accelerant as great as the World Wide Web in that regard.
Sure.
But as the hunt for knowledge has been disconnected from the thirst for knowledge, I mean, my children, my daughters don't need to lift more than a finger or two to have the answer to every question that's ever been asked. So their thirst for knowledge isn't required. And this disconnect between how hard it is to get knowledge and how you get knowledge is impacting us. And so I think, mastery is an important thing. But again, if you look at the education system, in most industrialized nations, as Sean likes to say, if you took a time machine back 100 years, the only thing you'd recognize is the classroom. And so that's a real problem. And so I believe, and we believe, that the future of education to make people more capable and prepared to succeed in the innovation economy is not in the hands of the government or the public sector, but rather inside of corporations in the private sector, where they can teach their people a new set of characteristics and the mastery necessary.
You both brought up such great points, and to sort of touching across the bridge across them is this context of education and curiosity, because since we adopted the Prussian schooling system at the beginning of the last century, it's been about indoctrination, not about education. And education comes from the word educat, which means to draw out, and education has been about stuffing things in. And so people don't think freely. They don't have an open mindset. They're not curious. And I've often said the most dangerous words you'll ever utter are, I know that, because it shuts your mind down. It stops you from learning. But this is the challenge. This is the dichotomy, is that we all get that it's important, particularly in an innovation economy, to stay curious. But the psychology of human beings is the need to be right, and I don't want to be wrong. So how do I be curious and not be wrong? That's the difficulty in this, and I can see why that's on your set of guidelines and around your values around bringing the right people in.
And teaching mindset, right?
Right.
Exactly. There is no wrong. If you've learned from it, right, then there is no wrong. And again, that gets back to being the learn-it-all, and it gets back to reserving the right to be less wrong tomorrow than you were today.
That's one of the big reasons help is our due diligence. We get to see how people behave when things don't go the way they want them to.
That's the big revealer.
It is. I mean, it's not, our character's not how we act, but it's how we react.
Absolutely.
We don't do what we want. And so we see that. When we first started doing this together, and like Andrew said, incredibly fallible ourselves, we intellectualized what we wanted. We documented our core values, but we didn't always behave that way because we all
Right.
had bad habits we had to break. And one of the best things about our partnership is we've always been honest with each other, and we do this thing we call hugging the elephant. So whenever there's an elephant in the room, we hug it.
Fabulous. I love that.
We attack it in the most positive way possible. We've trained ourselves on how to have difficult conversations, which that book changed my life. If you haven't read it, I highly recommend that to everybody in the audience. Difficult Conversations is incredible because the first primary principle is not to assume intent of the other party, but rather discuss how what their actions did made you feel, not why they did what they did. Or because most times you find out people weren't even aware of what they did, and we all know people don't behave badly towards you because of you. Typically, it's because of them. They've got an issue. So telling those things to ourselves and being honest with ourselves helped us finally get over it. But one of the primary examples was we observed this, what we used to call pre-check behavior and post-check behavior. And we wanted to help everyone that we invested in. And everyone we invested in or wanted money from us didn't always want that help, but they would say they wanted the help because they really wanted the money.
Sure.
And then they get the money and all of a sudden they go right into that mode. Don't worry, I got this. I know it all, whatever. Okay, fine. But you were disingenuous with us to begin with. So that's a problem, number one. And number two, we just need to be more, let's say, attentive. How do we vet these people before we write a check? And that was to do what we know how to do best, which is just generally be helpful. So we'll do small market development sprints with startups before we work with them, just to validate that there's a problem in the market based on the hypothesis that they've shared. And through the course of that, we'll learn whether or not we want to work together, can work together, and can actually deliver a return that's fully aligned with all parties.
And but back to the biases for a minute. Each of us have our own bias.
Yeah.
So do you think that we, as a company looking for venture capital, do you think that most companies who are looking for venture capital have actually identified what the real problem is, or do you think that most of them don't actually know yet?
Oh, I don't.
Because we're talking about being able to.
I think most of them probably have not, but that's okay. At the stage in which we get involved, it's to be expected that they don't. But it's the mindset, and it's the character, and it's the framework. When you combine those things, it's amazing what the outcomes are. And even when the outcomes are less than desirable or not what you would hope for, it allows you to continue moving forward and on to the next thing. And, we've talked a lot about the mindset and the characteristics in the innovation economy as more important than the skill sets. And that's a very critical thing. And, one of the things that we think about is having a mindset of abundance as opposed to scarcity. Because the reality is that, the nouns and the adjectives and the verbs, they keep coming and they're the same. But when you have a mindset of abundance, those same nouns and adjectives and verbs present themselves as opportunity. But when you have a mindset of scarcity, they present themselves as challenge. And just from that perspective forward, everything changes when you have that mindset of abundance and what you see are opportunities and not challenges. And to Sean's point, therefore, how you react to those things. Another one of our favorite sayings is really breaking frustration down into its mathematical formula, which is that frustration equals expectations minus results or reality. And if you think about all of us and the way we act and react to this world, it's because not the reality, right? The reality is the reality. You can bang your head as much as you want, but the reality is what it is. When you're stuck on the 101 heading to San Francisco and you're late for a meeting because there's traffic, the problem was not the traffic. The problem is why it is that you expected that the universe cared about your meeting in San Francisco. And so your frustration was created by the expectation, not the reality or the results of the situation. And so, again, I think to your question, it really is for the future and the innovation economy, It's about thinking about the mindset and the characteristics more than it is the skill sets.
So this is a fascinating conversation because, you know, the last thing anybody would expect about, as we talked about venture capitalism, is that we'd be talking mostly about the understanding of soft skills and mindset, and to have that, you know, a growth mindset, and to be open-minded and curious and grateful, you know, and all these things that we've spoken about. And I think this is vitally important and really a shift. Let me ask you both this question. What was the point in your growth, in your development? What was the turning point in your life, in your leadership, in your business philosophy that got you to this? Because with your backgrounds, I would not guess, and maybe I'm wrong, I would not guess that those are natural, that you've actually had to train that. So what was the turning point for each of you in your leadership philosophy?
You know, to be perfectly honest and quite personal about the answer, you know, a huge turning point for me was only 5 years ago when I lost my mother.
Wow.
And I lost her quite unexpectedly. And I think the promise that I made to her and to myself at the time is that all of the things that became so more obvious and came back into focus in a way that for humans, unfortunately, often only happens in the face of tragedy. I promised myself that the way I was going to honor her memory is to not let that dissipate. Because as humans recover, and we recover rather quickly as a defensive measure, the promise was that I was going to keep a hold of that focus on the things that really matter, that became so obvious in the face of that tragedy, and carry that forward until, you know, my end of days. And so, you know, that frankly is something that has allowed me to live up to the promise of experience, you know, and our core values of GrowthX, and to be grateful every single day and transparent.
Thank you for that.
Yeah, and so, and you know, and the other, you know, less personal and but equally as startling, you know, that led to my you know, meeting Sean and us building GrowthX with Max and with Will. When I moved back to the United States and chose to go to Silicon Valley instead of New York City, one of the first things that I realized that really struck me, that led to my wanting to do something that became GrowthX, is that as a founder in Silicon Valley, if you build products and start a company, they call you a founder. But if you sell products and start a company, they call you a non-technical founder. And so it was that, you know, startling reality, in addition to my interest in wanting to live in a certain way, that, you know, that was the combination for me.
Thank you. And the reason I'm asking this question is because, you know, what you're talking about something that is as hard line as you can get, which is finance, and we've had most of the conversation about the soft skills, and so, you know, and with both of your backgrounds being in much harder things, that's why I wanted to ask that question. So, Sean, what was the turning point for you in your leadership philosophy?
Well, I think there was a couple of things that all sort of to converge around the same time. It was, number one, recognizing that what I'm best at is helping other people get what they want. And if I could figure out how to focus my efforts and attention and skills and my own personal development in that area, that I could create meaning for myself as well as meaning for others. At the same time, in order to do that, I had to grow up in several ways. One was recognizing, as I said, that there's little distinction between personal and professional development in a human-centered world. And the second was to believe in myself in the way that others believed in me. Self-doubt was and is, I think, one of the most crippling characteristics that of the human brain that can drive people in a very into very difficult places. Even though I've always been an eternal optimist, I've also been driven by my own insecurities and self-doubt, and that's part of what my success come from. Ironically, is just always trying to run away from those fears instead of running towards them. So removing all self-doubt in pursuit of personal and professional development to help others is where I live now, and I'm fortunate to be able to do it in a place where I've actually got practical experience helping companies grow. And I would say, to your point earlier, never thought this would be a venture capital conversation. At the end of the day, every company and every business is just a collection of humans, and every interaction and commerce and learning opportunity is human to human. It doesn't matter if it's B2B or B2C or marketplace or B2B2C. It doesn't matter. It's always human to human. Until the bots start buying from each other and don't need us, that's the way it's going to be. And with seed stage startups, the impact of those humans and their behavior is even greater. Yes. Because there's only a couple of people who can decide whether or not they want to find their truth and learn to find revenue, or tank it because they've got founder bias or ego problems or other behavioral issues.
As we come to the end of the show, I want to just do a quick round, because this has been great. It's been really interesting, and actually, in truth, we could probably go for a lot longer. But we live in a you were talking about an innovation economy, but we live in a very different world. Andrew, you ran Reuters. I mean, you were the publisher of Reuters. We live in a time where people are calling fake news every minute. And on the other side, people are also desperately afraid of offending each other with opinions. So one of the questions I like to ask leaders is this. I would like for both of you, in a brief form, to share your bravest opinion. And I like to use that term because I think that we're very cautious of couching our opinions. And I like to show leaders as brave individuals who might say things that not everybody would agree with. But so what's your bravest opinion, gents? And that look is like I just slapped you with a cod.
It's a great question. I've never been asked it before. I don't know the answer. I need time. Do you have anything on your mind, Sean?
Well, I think you know me, Andrew. I'll say anything.
Go for
it. I think I could say this a couple of ways. I mean, I genuinely have let's just say, I place the importance of an individual over any group. And I choose to live my life that way. And I believe in that. And I believe that mindset and that attitude is what made freedom the best form of living. And I in fact, just came back from a very interesting forum with this thing called the Antigua Forum, which is they tout it as the Freedom Accelerator. And they take global public problems and they try to come up with free enterprise market-based solutions to solving them with no other purpose than to advance humankind and freedom. And I found out it's a lot of fun. I can accelerate freedom the same way I accelerate companies and people. And I had a great time at it. So that is my thing. I place the individual over the group.
I guess, I don't know if it's the bravest thing to say. Maybe if in my context, especially as a practicing venture capitalist and one of the heads of a Silicon Valley fund, to say that, I think faithfulness is very important. And it can take on any number of forms. But I think that, a society that vilifies faithfulness or tries to, place it in its own box and corner and refuses to encourage and celebrate it from the youngest of ages, both in the private and public sector, should not be surprised when the behaviors of older humans are different than what was ultimately espoused or hoped for by the community itself. So, that is one of my strongest beliefs, and in certain circles in which I operate, it creates a heated conversation.
Sure.
Even in my own household.
Well, and that's what I like it, because it does open, both. I always find that when I ask a leader that question, it opens a whole other conversation. I mean, we could go now an hour each on what you both said, right? The individual over the group. Faithfulness, what does that mean? Are we talking about marriage, or are we talking about something else altogether? There's a wonderful conversation, and I love to end or get close to the end of this program by doing that, dropping that seed in people's minds, so they can go away and go, I was listening to this podcast about venture capitalism, and I've actually come away with this thought about what the hell is faithfulness, and why does it really matter? Or is it more important to focus on the group, and we should really care about the group, or should we actually look at the focus of the individual? I always find that the bravest opinion is one that sparks intellectual curiosity, and by that, hopefully, moral and emotional curiosity, which is most rare. Because morals and emotional curiosity are rare, because people are like, well, this is the right way. Well,
I will tell you, Doug, that I'm a brave person, but I'm not so brave as to question, especially in your show, the faithfulness in the context of marriage. And so I just want to be clear. That is not.
No, but it's
not what I was talking about.
No, but I'm not suggesting it was. But what I'm suggesting is that faithfulness can be applied in a million different ways, and it's the automatic is to go to marriage. But where else does it exist, and how else does it exist, and what does faithful actually mean? For me, is a much more interesting question, because even the question, we've heard this question thrown a lot around in the media right now around loyalty. Well, what does that really mean? Are you loyal to me, or are you actually just, blowing smoke up my skirt? And how important is loyalty? If, can I be loyal and disagree with you? Apparently not in some circles, so
we've lost the ability in this country or just anywhere, frankly, to have deep conversation without personalizing it. And I think that's part of the internet. We still do not know how to behave on the internet machine. There's 7 billion people who've been handed this tool, and they don't know what to do with it. And so when people ask me, what do you do with it? How should you behave online? I said, exactly the way you behave offline. And if you can't behave offline and online the same way, then something's amiss.
I mean,
couldn't agree more.
It's the same rule about, the choices that you make when no one else knows what you've done ought not be any different than those that you make, on camera.
But again, those are philosophically true and rarely lived. So
like Ron Burgundy's a perfect example of somebody who's behaved on air and off air exactly the same way.
That's the Anchorman, right? I didn't, but I do know. I recognize that name. But
John just read Ron Burgundy's book, so heaven help us. That's a reference point for at least the next 3 months.
But it's fascinating to me that we don't do that. So that we believe, it's to address your point, Sean. And I'm big on this and fierce about it, which is personal development and professional development are no different. Who you are at work and who you are at home, it's bullshit that that's somebody different. You don't get to put on it. You might put on the mask, but behind the mask is the same person.
Yeah, you'll live a miserable life if you try to be two different people. You will
exactly. And when we go into a company and we're doing purpose work, and one of the things I say is, I've got the executive team there, and I say, here's the thing. You brought me in to help you find your purpose and elicit the values that support that purpose, right? They go, yeah. And I go, here's the thing I want you to know. At the end of this process, we're going to do that. But if I come back to you in 3 months and it hasn't transformed your home life, your life with your partner, your children, your friends, I haven't done my job, or you haven't integrated what it is that we did. It's that simple, because there is no separation. And, and it's like blows their mind.
Yeah.
So we are way over time.
That separation. I mean, and it's a generational thing too, because I think if you talk to our parents, it was a very different set of circumstances and a very different set of lessons that socialized them. But the reality is, when you try to create a false difference, you're creating violence, and you're creating violence inside of yourself. And it may be a perpendicular line that doesn't cross for many years, but I promise you, at some point it will cross, and it'll wreak havoc in the meantime.
Absolutely. And millennials get that better than anybody.
Well, but I think what's the common moral to everything that we're saying? It's understanding who you are and then managing that. That's going to determine how successful you are.
That is absolutely it. Gents, I have loved this conversation. Thank you both so much. It's been an honor and a pleasure. Please tell our guests where they can tap into all of your wonderful resources.
Well, the primary place for the company is GrowthX. So, they can go to growthx.com. Is the primary source to learn about us, our core values. Sean is at Sean A. Sheppard on Twitter. You can see a lot about him there, and I'm at A. Goldner. We invite people to come and look at our core values and read up about what we're doing. And most importantly, if they think that we can be helpful to them in some way, to please reach out.
Fabulous. Thank you, gents, so much. I hope you'll stay with us to the end as we say goodbye. It's been a truly a pleasure. And as I said, we could have gone for a lot longer talking about, venture capital.
Human behavior.
And for you, dear listener, remember, if you just listen, it won't change a damn thing. You've actually got to apply. Information's worth the hole in the donut. Transformation comes from application. So get yourself over to GrowthX, www.growthx.com. Find out more about these guys. Find out about how they can help you. Look into the value system and see what you can learn, because I'm sure there's plenty there. Remember, you can chat about this show or any of the past episodes by going to our Facebook page, Dove Baron Leadership and Loyalty Podcast. Remember, the research consistently shows that the fastest growing companies often face a less than intuitive challenge in that they find that they're spending a fortune attracting, training, and developing top talent only to have them leave at an alarming rate. If you're sick of investing in the training and development of your talent only to have them leave before you get your ROI, then come talk to us at fullmontyleadership.com, where we provide you with the essential leadership skills to rekindle and amplify the hidden loyalty assets inside of your organization by tapping into purpose. Full Monty Leadership, providing you with the concrete soft skills to get you and your organization to the top and keep you there. Why? Well, because you can't outsource authenticity. Remember, you can also stop by the Matrix, matrix.fullmontyleadership.com. You don't need a www.matrix like the movie, .fullmontyleadership.com, and get your authentic leadership matrix self-assessment tool. It's valued at $197, and it's free to you for being a viewer, listener of our show. To find out more about hiring me, Dove Baron, as a speaker or a strategist for your organization, you can find out more again at fullmontyleadership.com, just /consulting or /speaking. I want to thank you for sharing the show with everybody you know. Until next time, stay curious, my friend. Stay curious about the truth about venture capitalism and how it really comes down to the people involved. Are you ready for that? I'm Dove Baron, and I'm here to assist you tapping into your deep greatness to reach that next level of clarity, focus, purpose, and profit in your business, your life, and your leadership impact. And I am out.